Next, we continue with FinTech as we discuss innovating for access financial inclusion supported by FinTech and big data with experts in the business. They are, and let me introduce them with your support as well, Ms. Nahathai Poopichapong, Assistant Director, Strategy and International at Ascend Corporation. Mr. Angus Sanders, the Head of UK Strategy Funding Circle. And Mr. Saeid Kian, the former Product Manager at Wave Money, as the moderator. Welcome them to the stage.
Okay. Innovating for access, financial inclusion supported by FinTech and big data. That's a mouthful. You want to just jump into it right away with an introduction? Angus, maybe we can start with you.
Hey, hi, so I'm Angus. I lead strategy for the UK business of Funding Circle. Funding Circle is the leading direct lending platform for SME lending in Europe and in the US. What we do is we introduce creditworthy small businesses who want to borrow with investors who want to lend directly to those businesses. And to date, we've originated over £3 billion through our platform.
Hi, my name is Nahathai. My nickname is Keaw. I'm a head of international strategy for Ascend Money. So you may know Ascend in the name, our brand name is True Money for our mobile wallet application in Thailand. But you might not know that we also have operation in 5 other Southeast Asian countries. And we do mobile financial services in Vietnam, Cambodia, Myanmar, Philippines, and Indonesia.
And my name is Saeid Kian. I was the former product manager for Wave Money in Myanmar. Wave Money is a mobile money solution implemented by Telenor. So you can imagine I'm pretty interested when it comes to financial inclusion. There's a lot of words here. Financial inclusion, FinTech, big data, right? There's a lot of these big terms, these buzzwords. I think the most obvious question that I have jumping into this is, what does financial inclusion actually mean? I mean, you come based in London, you're based here in Bangkok, Southeast Asia, a lot of different countries you're working with, but 2 very different definitions of financial inclusion. And I'd love to hear from both of you, what is your definition of financial inclusions for your respective regions?
Okay, so maybe I start. I think financial inclusion for consumer would be that consumer can have access to basic financial services and products that match their needs. So this can be something like saving or insurance or credit to help them have better lives. Yeah.
And Angus?
So obviously Funding Circle's focused on SMEs, and as people know, SMEs are the backbone of pretty much every economy in the world. They tend to make up over 95% of businesses in economies and about 60% of employment. So SMEs are really important for the economies of most countries. And in order for them to grow and deliver value for those economies, they need credit. So from Funding Circle's perspective, the way in which we think about financial inclusion is ensuring access to credit for SMEs. And SMEs tend to find it pretty hard to find credit. So what Funding Circle does is just makes that a lot easier. And just to give you a couple of ideas of numbers, so as I said at the start, Funding Circle's originated or facilitated over £3 billion of lending. What that equates to is nearly 40,000 SMEs supported and the creation of over 100,000 jobs, which is pretty serious impact on the economy. And that equates to almost £4.5 billion of impact on the economy and growth. And so that's how we think about financial inclusion.
So I'm pretty interested in this, right? We have SME focused over here, direct to consumer, very different definitions of financial inclusion. But the question for me is, how do you actually measure that, right? How do each of you, Keaw, starting with you, how do you actually measure whether or not you are successfully implementing a financial inclusion solution?
Yeah, so I think an official term that the World Bank use are when you measure financial inclusion, you measure people who have access to account, like either by bank account or microfinance account when you borrow money, or people who have access to mobile financial services when they open mobile banking account. Like for example, I think based on the World Bank data, by 2014, the number of people who have this account increased from 2 billion to 2.5 billion. So within 3 years, so the number increased by 500 million people, and a lot of these are people who open mobile banking accounts. Like for example, in sub-Saharan Africa, there are about 64 million people who have mobile banking accounts, and almost half of them, this is the only account that they have. They don't have access to normal traditional bank account.
So mobile accounts. So
yeah.
You're actively measuring mobile accounts, and the more mobile accounts that are opened, I'm assuming active, then you can successfully say you are pushing financial inclusion.
Yeah, so either bank account or mobile account. But mobile account doesn't mean that when you have just telephone, but mean that you use the telephone account to conduct financial services, like sending money or putting money in investment or putting money in saving.
I see.
Yeah.
And obviously for you, it's going to be a little bit different, right? It's not customer opening up a mobile account that's active. What is like the number one thing you measure when it comes to seeing whether or not you're actually helping push financial inclusion in the UK, in the US, in these markets that you're active in?
Yeah, so I mean, let's be clear. Funding Circle is about delivering credit-worthy businesses with finance, and that's our sole purpose, alongside delivering a strong return to investors. And so our aim is to deliver SMEs a great service, and so financial inclusion is a part of that. It's not necessarily our overall and number one goal, but obviously it's very, very important for us that we do deliver financial inclusion. And so as I said, the first metric we always think about is total origination, how much money is going directly into the hands of SMEs. The second one is an interesting one, is net lending to SMEs. So this is a measure of how much money goes out minus the amount of money that comes back. And this is actually a really good metric of looking at how much real money is going to the economy. And if you look at lots of markets at the minute, whereas bank lending, total lending is very big, the actual net lending is very small. So to give you an example, from January to May 2017, Funding Circle in the UK did more net lending than the 22 biggest banks put together. Now, that's partly a measure of Funding Circle success, but it's also really a measure that big banks are pulling back from SME lending. And so for Funding Circle to be able to deliver increased net lending shows that we're able to deliver value to SMEs and to the economy.
Right, so you can actually effectively say, because of the lending that's happening to SMEs, if these solutions were not in place, a lot of these small businesses will actually not be getting those loans to start with.
Absolutely, yeah. So 20% of the businesses that come to Funding Circle wouldn't have got finance from their bank. But even the other 80%, it takes about 3 months to get a loan from your bank. And so the amount of time that takes for an SME is huge, and they don't have the capacity to deal with that. So coming to Funding Circle for that is very important
right.
for them.
And that's something that I'm happy that we touched on. A lot of these conversations with financial inclusion tend to be about the ones that would have never gotten a mobile account opened if it were not for these solutions. But a lot of times it's also that other 80%, as you mentioned, that you save time, they save money. Perhaps they would be able to have these solutions. And I think both of those aspects, both of those sides of the coin, can be extremely important. So I'd love to also hear from you all from mobile accounts. Are you seeing a lot of people introduced to the first time to these financial services? Are you seeing people who were never included suddenly having access to some of these services?
Yeah, absolutely. So what I mentioned, the number of accounts, so that's not just the one measure that we measure. So there are also obviously number of transactions they do, what kind of transaction they do, also the amount of money that they process. So for example, in our True Money Cambodia, right now, this is just our 2 years of operation, but we have about 1.5 million customers. So a lot of them, previously, they don't have access to these services. And 1.5 million customers, this is essentially about 10% of Cambodian population. So this is the number of people that we included them into financial services. Yeah.
So let's go back to the original question. I mean, the whole idea is that there is this assumption that's really starting to be supported by data right now that FinTech is actively improving financial inclusion, right? Can you explain a little bit why that is? Why is FinTech suddenly starting to break those barriers down? Is it simply cost? Is it scale? Is it a combination of these things? What is it about FinTech that allows these barriers to financial inclusion being finally broken down? So, I mean, I can take that one to start. So in the UK, for instance, banks have huge legacy infrastructure, and it's really problematic. It's very hard for them to develop anything, which means that banks have huge databases, huge customers, but they find it very hard to use and store that data. So Funding Circle's in the very lucky position that we can come in fresh
and put data first at the start of everything we do. We're fundamentally a data company alongside a credit and origination company. And so what we do, and big data powers everything that we do. So if you think about it, there's this amazing virtuous cycle where once you start to use it, you get better and better. So as we offer more loans, we have more data on every borrower that comes to us, on every borrower in the UK. That allows us to perform better credit decisioning and accept more businesses, which means more businesses get a loan, which allows us to spend more money on marketing, because for every business that comes to Funding Circle, we can offer more of those borrowers money, which allows us to get more loans, and you have this virtuous cycle. And that means that data is the core of what we do. And for us to continue to grow, to continue to deliver value to SMEs, we'll need to continue that virtuous cycle.
Yeah, I think on similar things, the banks that are usually the main financial institution that people would go to, they have too high operating costs and setup costs. Like, for example, in Myanmar, the largest bank would have not more than 100 branches countrywide. But to open a mobile agent services, which we can scale up about 5,000 agents within 1 year by signing up their individual retail store nearby your house to offer services such as remittance or bill payment or mobile top-up. So this allows their services to be accessible by people in rural areas that the bank might not target because it's not cost effective for them to serve. So by opening these services, people can now easily access their services rather. Like previously, when you want to send money from, let's say, Yangon to Mandalay, you might have to send by bus. Like, go to the bus driver and ask them to transfer your money, and that would take probably 2 days. So by having this kind of mobile money players, now customer can do it real time and save them costs and save them a lot of effort to perform services. Yeah.
Yeah, I mean, branches are so expensive. If you were to start a bank now, I mean, look, in the UK, there's loads of banks starting. You wouldn't go for branches. You go fully online. You go app-based. But now that these big banks have branches, they can't get rid of them, and that adds enormous operating costs, which make it much harder for them to innovate.
Right, and you mentioned Myanmar, for example. I mean, Myanmar's banking penetration is somewhere around 3.1 bank branches per 100,000 people. For those of you that don't know, that's roughly in line with Sudan, Haiti, Afghanistan. So you're talking about one of the worst, in terms of banking penetration, countries in the world, right? So this can really be innovative in terms of actually breaking down those access to financial inclusion and actually getting people on board. One thing that I think the audience is particularly interested in, a lot of people have been asking about, is now that you start to actually bring people in, you touched on it a bit earlier with data, but how does big data actually play into all of this? Once you actually start including people in these financial systems, what do you do with that data? How do you collect it? Why does it matter? I mean, it's such a buzzword right now. I would love for either one of you to kind of tackle that.
Okay, so I think a lot of time we see the data used for credit rating purpose. So Angus might be able to clarify better in terms of business, but in terms of customers, a lot of time customer cannot get access to credit because they don't have credit history. So what we see a lot of fintech companies, they do is they try to come up with innovative way to measure people's credit scoring. For example, Alipay and Financial, which is our strategic investor, they have this things called Sesame Credit. And the way they do is they measure people credit score based on people transaction on Alipay account, people online purchase on Taobao, which is Alibaba's online purchase retail platform, and also a lot of social media data. This one, they use like thousands of variables to come up with one score that used to tell you how much you're worth. And this score is used, individual can use to borrow money from financial institution. They can use to apply for visa. They can use to even verify their account on Airbnb. This is like improving people access to a lot of services that help them gain access to what we have in modern day life that previously they don't have because they don't have credit scoring. Yeah.
Yeah, I mean, that's really interesting because credit data is the #1 challenge for Funding Circle. So whereas with consumers, you can do loads of cool things like look at their social media data and stuff like that. I wish I could say we do the same thing with SMEs, but sadly, the fact of the matter is it's just not as predictive. It's great for looking at how well a consumer pays back a loan, but that doesn't translate necessarily to an SME, and SMEs don't use Facebook and Instagram in the same way that an individual would. So what we need to rely on, and what we currently rely on in Europe and in the US is pretty standard financial metrics, looking at data from bureau, data from the bank account, etc. In order for us to be able to continue to expand outside of Europe and outside of the US, we'll need to work out how to do much more innovative credit assessment. I think that's the real key. Once people can work that out, that will be really advantageous. But there's a step before that even. One thing that governments can do is make data available. So you look, a lot of the countries you go to in the world, banks have a monopoly on lending. Banks have a monopoly on lending data. And one thing that's been fantastic in the UK is the government has forced banks to open that data up to everyone, so that everyone can access this transaction data, which is really beneficial for the individual, for the SME, in order for new startups to access that data and do really cool analytics with it. And what I would say is if any country can do that, it'll make a huge difference. The challenge we face with that is that it becomes quite complex with privacy laws. And so it's about finding the right balance between open data and privacy laws, and that's really tricky.
So then how do you effectively gauge prices, right, aka interest rates, if someone's new? Let's say I'm a small business. I've never gotten a loan before. I'm part of this financial inclusion metric we were talking about before. It's my first time. How do you all begin to even tackle that problem of where you should give my interest rates, my loans? What's the price for money?
Yeah, it's hard, right? So, so banks, first of all, what a bank would do is they'd look at your credit card if you had one, or they'd even look at your bank account, your current account, whatever you have. But fintechs don't necessarily have access to that data. So the first step I would say is give fintechs access to that data where it exists. Where it doesn't exist, that's the key question. So what we do is we look at some metrics like the way in which someone fills out their form, the amount of time they takes to fill out the form, the way in which they answer certain questions. That's quite predictive. But again, coming back to some core metrics like how well do these people pay, whatever they need to pay is absolutely key. So then you go back to look at kind of bank statements, financial statements, but also things like utilities and telephone bills. That's a really good example whereby if you democratize access to that kind of information, then it's much easier to do a credit score. And the only way you can set the price is to know what the likelihood of default is. And the only way you can know that is to have access to data.
Okay. So it sounds like a fundamentally different challenge rather than the consumer one, which you're tackling, which is looking at behavior, right? I mean, for you, what you were mentioning earlier, for actually understanding this, bringing this big data in order to open more mobile accounts, in order to push financial inclusion forward, is it strictly just customer behavior? Are you just waiting to see how they top up, for example?
Yeah, that as well. Like, for example, a lot of mobile operators right now, they are partnering with insurance company. And insurance company will get data from these mobile operators on how much people are paying, topping up their mobile phone, what internet website they are browsing, so that they can target in selling micro insurance at only $1 per month. So yeah, so they cooperate with this mobile operator to cross-sell their insurance product. And there are a lot of times that they segment, like they would see you are this like target segment A, they might charge more than the one who are target segment B, which maybe have risk profile different from the other group. Right. Yeah.
And with the advent and increase in access to the internet, things are changing. So if you look at Indian platforms where credit data is not so strong, a lot of what they do is partner with e-commerce players, and the e-commerce players will give them payment information where it otherwise wouldn't exist, which is fantastic. And that's a really big step in the right direction. But if you think in India, what proportion of SMEs are selling on e-commerce, it's tiny, it's under 1%. So the real challenge now for us and for platforms like Funding Circle is going to be, how do you access that rest of the 98%? How do you access those 48 million SMEs that are not operating through e-commerce platforms? And finding the way to assess those guys is going to be key.
Well, this kind of brings me to this next general point, which I think most people want to know. Financial inclusion has a lot of great stories, and we're really happy to see a lot of the progress that's been made over the past few years, but there's key significant challenges, barriers. I would argue that even within countries, the different regions have different challenges. There are barriers across the board, whether it's product development, whether it's distribution, but again, the differences are going to be between SMEs and customers. Both of you, what are the challenges that come with actually expanding financial inclusion forward? Once you have your foot on the ground, once you have your core customers, once you want to expand, what are you finding the roadblocks there? And if you've addressed them, how have you addressed them?
Okay, like for us specifically, I think regulatory restriction is one of the main roadblocks for us in many Southeast Asian countries. For some government might be more open to fintech and innovation, but for some government, they are still pro-bank, or they are still wait and see how fintech will play out. Like for example, in Vietnam, where we offer service right now in terms of bill payment and top-up, the government are still reluctant to give us license to do remittance services because they're not sure about KYC, they're not sure about fraud, they don't know if this will be taken up well by the market, how would the bank react. So a lot of time, the government are the one that we actually have to manage to get this up and running. Otherwise, their customer, they are very quick in uptake this kind of product. Yeah. So
regulatory.
Yeah, I'm going to have to agree with that, actually. So I've banged on about data a bit, but regulatory is the other one. So in most countries, until it's been actively approved, direct lending is not legal. And actually, as you guys know, with financial services, it's not like with some businesses where you can really push the regulation. If you get it wrong, you go to prison. So it's pretty serious. And it's really shown in the development of direct lending is where regulators have taken innovative approaches. So in the UK, the regulators were really ahead of the board. And look, it can go either way. So in the UK, regulators were right ahead at the vanguard. They engaged with the industry. They said, look, we want to regulate this industry and we want to help it foster growth. And by getting in there early and regulating it well and clearly and efficiently, what it's meant is it's allowed the industry to flourish while also protecting the consumers that interact with it, which in turn builds trust and allows the industry to grow. So insightful regulation can be a fantastic thing, and it can really foster growth. If you contrast that to areas where it's not legal, that makes it a lot harder. And I know in Thailand, I think it's going through the regulatory sandbox at the minute, and the faster we can move that along, the better, because it will allow us to kind of deliver value to SMEs in the country.
Yeah, so let me push back on both of you a little bit, because technically every financial institution will always say, regulation is going to be the number one challenge. Whether or not that's true, I definitely think you hear it across the board from all key players. If I were to remove that answer, if I were to say you can't say government regulation, what would you say is the second challenge?
Can I just add a nuance to what you've said? So
yes.
I wouldn't say regulation's the number one challenge. It's much more of a yes or no. So if the regulation's great, it can be very easy, and if you engage with the regulator, it's fine. From what I've heard, the Malaysian regulatory authority is very strong. Same with the Singaporean one. Similarly in the UK. And that allows you to foster growth. So it's really a yes-no thing. Mm-hmm. So absolutely, if it's illegal, it's the number one challenge because you can't go into it. If it's not, then it's great.
But many companies find themselves in these gray areas, right? So let's say hypothetically, you are a company that's just started or has already started, and you're starting to get traction, right? Again, it's going to be different between SME and consumers, different types of challenges. Let's say you're in this bit of this gray area where the regulatory agencies haven't necessarily defined out, right? And this is common. I hear this everywhere in the US, in Southeast Asia. I mean, you kind of see this across the world where there'll be some type of gray area where, maybe the regulatory does apply, maybe it doesn't. What's the advice you would give to these companies, based off of your experiences both so far? Keaw?
Okay, so do you still want me to answer the previous question on what are the second?
Yeah. I'm trying to get you to say something other than regulation.
So obviously, I mentioned Vietnam. That one we get a strong no, right? That they said you cannot. But in other 4 countries, somehow we operate in some of the gray areas as well. But the government doesn't say no, so that's why we still operate. But to answer your questions on what are other challenges, I think I would say distribution and there's in terms of product development as well, because there's no one size fit all that fit with all this market. You know, Southeast Asia, although you say it's in the same region, but all the customers and all their customer behavior and their technical and their geography, they're all different. For example, in Cambodia, we might have the good phone signal so that you can use mobile app to offer our services. But when we go to the Philippines, they don't, somehow when you go to some remote islands, you don't have a proper GPRS even, so you have to operate with just an EDC machine. You cannot use smartphone. So a lot of time we have to adapt our product and services model to match with all these different countries. And that somehow make the scaling up not as fast as we want it to be. Yeah.
So distribution and products that are actually relevant for each country's.
Yes.
Yeah. And the reason I'm pushing on this is because a lot of entrepreneurs are asking me, advice, right? Yeah. This is a secret way of asking for advice. And for you, what would you say outside of making it more concrete? Yes, no, yes, regulations.
So after that, as a fast second is credit data, like we've talked about, not just credit data, but data for targeting and marketing as well. So it sort of comes back to the distribution point. So when we look at a new market, there are some key things we look at. Obviously, the market size and the opportunity is important, and that's kind of clearly a sliding scale. So it's like, how big is the opportunity? Is it quite big, very big, not that big? Whereas with regulation and credit data, it actually becomes much, much more binary. So on credit data, again, it's like, is the data available? Do banks provide this data? Are there private credit bureau who provide it? Is there access to innovative sources of data? And between credit data and regulation, that's kind of really what's required for innovative companies to come into new markets and disrupt.
Well, we're starting to get close to the end of the time, so I wanted to kind of just throw out a general final question. I have a feeling what the answer is going to be based off of what you said earlier. But let's say you have a genie come into the room. Both of you all, financial inclusion, as you mentioned earlier, technically isn't exactly your bottom line, but it's so well aligned that in a lot of ways, when financial inclusion succeeds, both of you all are succeeding, right? A genie comes in the room. What is your one wish for 10 years from now for financial inclusion? What would you do if you could do anything, if you could solve any major problem?
Yeah, so I would say I hope that there would be more company, both startup and corporate, who are looking into this space, because actually there's a vast majority of opportunity that haven't been touched. And a lot of time you see new fintech coming in, and they focus on like the very high end, top of the pyramid, and they ignore this bottom of the pyramid that are like billions of people in the world that can still benefit from all these new products and services to improve their life. And you can make money out of that too. You can, like, from all this service on remittance, saving, insurance, there are a lot of money to be made, but now this segment has been ignored for a long time because there's something sexier, something more fancy, there's buzzwords out there. So I just hope there would be more entrepreneurs who,
I like that, competition.
Who want to do this.
That's a good answer.
Yeah. Maybe they can do some other market.
Yeah. Angus?
So I guess there are two parts to the answer. So in the markets where we already operate, so I'll answer the question from Funding Circle's perspective. In the markets where we already operate, I think it's awareness. Awareness of not just of Funding Circle, but of alternative sources of finance. In the UK, awareness of Funding Circle is around 10%. It's pretty low, even though we're a relatively big player there. So just getting SMEs aware of the alternatives they can have so that they don't just go straight to their bank as first port of call every time, that would be huge. And that would really change the SME's experience of finance for the better. And then the second, of course, I'm going to cheat with two, would be in the markets where we don't operate is the availability of credit data and regulation.
Right. Well, that's obviously a key challenge. I know there's a lot of buzzwords that come with this: financial inclusion, fintech, big data, but there obviously is a real human component to it, and it definitely prevents these businesses from being able to actually execute. And specifically when it comes to fintech, and I think the barriers to execution are barriers to financial inclusion. But I think we're all about wrapped up now for our panel. I wanted to thank both of you for your time. It's been really interesting, especially from the SME side, UK and US, all the way to the direct-to-consumer, 5 markets in Southeast Asia. It's definitely fascinating. So thank you both for your time.
Thank you.
Thank you.